Hello, everyone. Tony here. US stock markets gained last week with technology shares leading the way following Apple's announcement of a $600 billion investment plan in the US. The rally was also supported by solid corporate earnings, prospects of a potential Russia Ukraine ceasefire, and Stephen Moran's appointment to the Federal Reserve Board. This dovish appointment coincided with reports that Governor Christopher Waller is Trump's preferred candidate to replace Jerome Powell as chair next year. Now, Waller has maintained a dovish stance throughout 2025, which aligns perfectly with Trump's preference for lower interest rates. Looking ahead, Tuesday night's CPI report will be the key focus this week. Let's take a look at the charts of the S&P and the Nasdaq to see where they are at the start of this new week. Okay, so we're going back and looking at the weekly chart. Now, this weekly chart has contained the uptrend for the better part, or really since that October 2022 low. And last week, we started to get a little bit interested because there was some initial signs of rejection from this trend channel resistance, which was coming in around 23,500 to 23,600. It's not an exact science. The thickness of the line can really determine, can put it to a different level by about 100 points, potentially 200 points. So we need to keep that in mind. This is a long-term chart, which we're basically looking at here on this time frame. And what you can see is that last week, the NASDAQ pushed back up against that trend channel resistance. So at the very, very least, it does negate the week before's bearish red candle. There was no downside follow through either, which was also a bit of a problem. We really wanted to see it break below last week's low, the prior week's low, and it just failed to do that. So we start this week with the NASDAQ once again testing this trend channel resistance. Let's say at this point of time, it's coming in somewhere around 23,700. Now, again, we need to be a little bit flexible with this. And we also need to be open-minded that it can reject this resistance and come back for this wave four we've been looking for, or it can push above here and start to make its way up towards 25,000. So right here, right now, looking at this weekly trend channel, the jury is out. When we look at the daily timeframes, what we can see here is this very brief sell-off after the non-farm payrolls, which to me, it just didn't last quite long enough or go deep enough to really count as this wave four that we've been looking for or waiting for. A wave four, for me, should take 3 to 4 weeks to develop as the NASDAQ, really builds up and consolidates the gains which it's made since those April lows. And a one-day pullback for me just isn't enough. So at this point of time, I see this as a wave three extension pushing back up towards that weekly trend channel, which, as I said, does leave two possibilities. We either reject that weekly trend channel resistance or we break above it. And we just don't know at this point of time. Now, when we look at the S&P 500, the S&P, we spoke about it needing to break below support coming in around 6,200 to 6,180. And it got down to this 6,212 area, this low we saw here on Friday, the 1st of August. Which was, again, that non-farm payrolls shocking report, which we saw. And then it's just bounced up. It's not really an inspiring bounce for me. It is potentially part of a corrective move. This could be your wave A, wave B, and this could be your wave C. But right here, right now, I think the NASDAQ being the high beta market is probably what we need to keep our eye firmly on, combined with this 6,200 area. Thanks for listening and have a great week ahead.